Welcome everyone to our webinar this morning. We'll just give it 1 minute and wait for everyone to flow in, and then we'll get started. As you're all just joining in the webinar now, feel free to say hi in the chat. We've got Hayley from our customer success team on the line as well. She'll be helping to answer some questions during the webinar as well, and we'll be on during the chat too. So feel free to jump into the chat, say hi, let us know where you're joining from. I think most of you here today will be Superhero customers. Welcome to you, and also welcome to anyone that isn't currently a Superhero customer. We're really happy to have you on the webinar as well. Alrighty. I will share my screen and we'll get started. And just as we go, if you've got any specific questions, we will have time for a live Q&A at the end of the webinar. So if you don't mind using your Q&A function, it should be in the bottom of your screen throughout the webinar. If you've got any specific questions, that means we'll be able to make sure that we don't miss them in the chat and that we can see them there for the end of the webinar. That would be really helpful. Thank you. And I will share my screen. Oh, hope everyone can see that okay. Oh, give me 1 second. Sorry, guys. Just having slight computer issues here. All right, I'll share one more time. Okay, there we go. So before we jump into the content, just a reminder that Superhero does not provide financial advice. It considers your personal objectives, financial situation, or particular needs, and all investments carry risk. So please be careful before investing. Past performance is not indicative of future performance, and any pictures, graphics, charts, or graphs today are provided for illustrative purposes only. We will be looking at a few investment examples today, so just keep in mind that the data shown on the screen was pulled about a week ago and it's past performance, so it doesn't indicate any future performance. All right, so this next webinar today is all about energy and utilities, and it's part of our Sector Spotlight series that we're running to the end of the year. So you can sign up for all of our Sector Spotlight webinars we've got coming up till the end of the year. And essentially a sector is a group of stocks that have a lot in common with each other. So usually because they're in a similar industry. And when it comes to the global sector, there's 11 industry sectors that are defined as these global sectors, and there's a classification standard of those. And you can see on the right there, they're those 11 sectors. So we're kind of going through a number of these different ones over the next couple of weeks. And today we're actually focusing on 2 sectors that are different, and we'll explain kind of why and how they're different. But they also do have a lot in common, or they interact quite a bit. So that's the energy sector and the utilities sector that we'll be looking at today. So what are energy and utilities, and what is the difference between them? So an energy company is essentially a company that supplies energy or produces energy. So different energy suppliers produce energy in different ways. So that could include things like natural gas, nuclear power, coal energy, and also some of the new renewable energy sources like hydropower, solar power, and wind power. So an energy company is the company that actually produces that energy. So, you know, a company that might own a bunch of wind farms, for example. The difference between an energy company and a utility company is that a utility company sells you electricity and power to your home. So if we think about a supply chain, the energy company is the producer of the energy, and the utilities company is the supply company, or the company that actually interacts with the end consumer and sells them a product directly to their home. So when we think about our energy providers, you know, the likes of Origin Energy, or the likes of, kind of a Red Energy and AGL that you might do business with, that would be a utilities company versus an energy company who's a creator of that energy or a producer of that energy. So yeah, there's some more information on the slides there. This webinar will also be on YouTube in a couple of days, so you can come back and have a look at this information as well. All right, and I'll just jump in now to show you the difference between the companies that are on the energy index versus the companies that are on the utilities index, and we'll focus firstly on the ASX. So on the right here, you can see the companies that are in the energy sector. So some of these you might be familiar with, but a lot of these aren't actually customer facing. So it's not the type of company that we would interact with as a consumer on a day-to-day basis, but as an investor, you might have heard of quite a few of these. So the likes of Woodside Energy Group, Santos, Whitehaven Coal. We'll go through a few of these in more detail in a few slides. But that's the list there. And then when it comes on to utilities, here's some companies you may have seen. So the likes of Origin Energy or AGL Energy are kind of brands that we interact with on a day-to-day basis because they actually are the suppliers of energy to our homes. So we may have a contract with these companies to supply us energy. And yeah, you can see there power, gas, and water. So the types of bills that we see coming to our doorstep, they are from the utilities companies. And when it comes to global energy sources and trends, there's a lot happening in the energy space at the moment. So a few different types of energies that we'll look at today. Sorry, my words are getting a bit mixed up. The first one is electricity. So a very common source of energy. The power consumption for electricity is projected to triple by 2050. So as electrification and living standards grow. So when we think about, a lot of the developing countries as well, definitely a lot more electricity being used there as more and more people are connected to power sources. Electrification is one of the first decarbonisation levers as well. So when we think about the electric vehicle sector, again, using electricity there, definitely a trend that is growing at the moment. And it's one of the most low cost and easy to implement when it comes to energy sources as well. So yeah, projected to 3x in terms of, and this is from a report done by McKinsey, projected to triple by 2050. The next energy source is hydrogen. So hydrogen, I've just realized that some of our content here is a repeat. Sorry about that. But hydrogen is another energy source that has really, really started to take off. There's a range of different ETFs on the ASX too. I can think of one in particular from Global X, who used to be ETF Securities, that is focusing on the hydrogen market. But yeah, so hydrogen is 4 to 6x is the projected growth for hydrogen by 2050 as well. So another growing energy source. The third one there is bioenergy. So sustainable fuels can provide emissions reductions when compared to electric vehicles. And this is something that, is seen as kind of an alternative to electricity when it comes to renewable vehicle energy sources. And so they think that in the next 20 years, there'll be 2 to 4 times projected growth in the bioenergy space. So another one just to keep an eye on is using kind of those biofuels as an alternative to electricity to power those new kind of renewable projects as well. And there's a lot of projected investment in that space too. And then the last 3 energy sources here are ones that you're probably quite familiar with. The first one here is gas. So gas has gradually increased its share in the energy mix and is the most resilient among all fossil fuels, given its lower carbon intensity than other fossil fuels. So not comparing to renewable sources there, but when compared to other fossil fuels. It's projected to play a pivotal role throughout the transition by its widely used range of applications, and demand is projected to peak by 2035. So still a while to go there before the peak, but they think that, 10% projected growth of gas demand in the next decade, and by 2050 that gas will have a 15% market share. So still going to be used a lot by 2050, but obviously we know that renewables are really, really going to start to take some of that market share over time as well. Oil. Now, global liquids demand is projected to peak in the next 2 to 5 years, driven primarily by the uptake of electric vehicles. However, crude oil demand is projected to decline rapidly beyond 2030, and that's due to transition to more renewable sources as well. And you can see some more numbers there in terms of still having a share of the global energy market, but especially in the crude oil space, seeing a decline there as that transition happens. And then global coal demand. So global coal demand, was generally on the decrease. There was a short-term revival following recovery from the impact of COVID, but the long-term trend there is that coal's market share will decline as the transition to renewables increases, and that by 2050, there'll be a 10% projected share of coal, so less so than natural gas, which is projected to have 15%. So when it comes to all of these energy sources, coal and crude oil are probably the ones that we project a decline in, or this report from McKinsey projects a decline in, whereas some of those earlier on sources, so the likes of electricity, hydrogen, and biofuels are definitely the ones where there's the most projected growth. These are newer energy sources, they're renewable energy sources, and that's where the trend is going. And this is essentially just a graph that outlines everything I've just spoken about. So by 2050, you can see that the breakdown there, electricity is making up quite a big share, and then hydrogen and bioenergy really starting to grow. You can see hydrogen there has really taken off since 2020, so very, very new compared to the other energy sources, and coal there kind of on a steady decline, as well as oil and natural gas kind of following a little bit of a decline to 2050 as well. And yeah, actually interesting to note, you'll see at the top there, a total of 64 countries have pledged or legislated achieving net zero in the coming decades. So again, when we're investing, it's always important to look at the companies themselves, but also the global kind of geopolitical climate as well. And just, keep in mind that a lot of countries have actually committed to getting their emissions down. So they are motivated to invest more into these renewable energy sources as well. Alrighty, I think we can kind of not spend too much time on this one, but again, just goes into more depth around coal, oil, and natural gas in terms of where these sources peaked in terms of their demand, and then essentially what will follow or projected to follow by 2050. So you can see there that those different peak times, some have already happened and some are happening around now, and then kind of natural gas hitting its peak there at 2035. When it comes to investment in the sector, you can see there that the biggest growth in that sector is from decarbonisation technologies and renewables. So we're sitting kind of the third coloured one there, sitting around the 2022, 2023 at the moment, and projected out to 2035, a large increase in renewables, but the biggest increase there, you can see that decarbonisation technologies are really, really growing in terms of their investment into the sector. And when it comes to Australia and our energy generation, the Australian renewable energy industry accounted for 32.5% of Australia's total electricity generation in 2021, which was almost an increase of 5% year on year. So, 32.5% is quite a significant amount coming from renewables, but we've still got a long way to go. You can see the graph on the left there shows that growth. So you can see, from 2010, we've more than doubled our kind of percentage from renewable sources, which is great to see. And, hopefully that trend continues. And on the right there, you can see where those different renewable sources are coming from in Australia. So kind of big portion from hydro and from wind, Solar's really taken off in the last 10 years. It has kind of seen that more exponential growth. And then bioenergy is there as well. So we spoke about biofuels before. But yeah, hydro, wind and solar really making up the bulk of that energy production when it comes to renewables in Australia at the moment. We just spoke about Australia. What are other countries doing in this space? Some really interesting stats here around countries that are very advanced when it comes to their renewable energy production, and also some countries that are still quite reliant on fossil fuels. So just thought we'd go through this one. When it comes to hydro energy, Norway actually gets 45% of their total energy supply from hydro or hydrogen energy sources. Brazil gets 32.1% of their energy production from biofuels and kind of that waste management, which is, yeah, really interesting to see. And then New Zealand gets 25% of their total energy supply from wind and solar. So kind of similar, I guess, to the Australian makeup there when it comes to that portion of wind and solar energy. Now, fossil fuels, some of the countries that still rely quite a lot on fossil fuels are South Africa, relying 73% on coal for their energy production. Oil in Singapore still makes up 73%, and natural gas in the Netherlands. And again, these are not exhaustive. There's a lot of information online as to where every country is sitting in their commitments and their different kind of makeup of how they get their energy. But yeah, the Netherlands there relying on natural gas for 45% of their total supply. And again, different countries have made different time commitments, different commitments to those renewable targets, I guess. And they're all at different stages for a number of different reasons on achieving those. But just interesting to see how Australia compares to the rest of the world there in terms of our energy production from renewable sources. Now, I don't know whether anyone has seen this in the news, but there's been a lot of talk over the last few months about a global energy crisis. And sorry, this slide is quite word heavy, but it does really list out some of the reasons why there has been a global energy crisis. And I thought it would be really helpful just to go through a few of these, because there's not one reason that's causing this. And, you'll see kind of these media headlines, but it's important to look behind the headlines as to what's happening globally and then how that's affecting Australia as well. So a few of the factors that are contributing to this, the Northern Hemisphere. So the Northern Hemisphere had quite a harsh winter last year and then quite a hot summer. So obviously, the colder and hotter it is, the more we want to use our heaters and our air conditioners. So that drove up demand for energy, and therefore, there was less supply to go around across the board in the Northern Hemisphere over the past year. We've all heard about the conflict in Russia, and that has also added to that energy crisis. So as Russia further limits exports of natural gas and the conflict still continues on there, it's meant that supply is even further depleted, despite there also being an increase in demand. When it comes to natural disasters, hurricanes in the Gulf of Mexico disrupted up to 90% of that region's oil and gas production, which is just a huge impact there. COVID, something we're all, I'm sure, sick of hearing about, but all of the economies kind of opened up in North America, in Europe, Asia. When we think about all these different companies going back to production and restaurants opening up again and people being out and about, that all needs energy to run. So when we went from all being inside in our homes every day to then kind of functioning in a full economy, that also increased the demand as well and caused pressure on the supply chains. And just to mention on China as well. So China recently reduced its coal consumption in order to meet emissions targets, but is now kind of back in the market for fossil fuels to power its economy. And there has been some tension there with Australia when it comes to accepting Australian exports or imports into China from Australia. There's been a bit of tension there as well. But China is kind of looking to increase its coal consumption from where it was, as it tries to get its economy kind of back on track as well after COVID. So instead, China has also dramatically increased its intake of imported liquid natural gas, and is also attempting to get that coal inventory up. So they're buying up supply from Indonesia, Mongolia, and Russia, and domestic coal prices are hitting record heights as well. So a lot going on in China. How does this all affect Australia, which we obviously all live here, we care about that. So as a resource-rich nation, Australia, I guess we have a lot here, and we're a net exporter, so we actually give away more than we need to import in. So when it comes to our own global energy crisis, it means that we're less exposed to those global energy crises when it comes to supply and demand, because we do have a lot of local production here. Obviously, in terms of our economy, we are a net exporter, so those things like tensions with China do affect how much we're able to sell to them, and therefore it can impact our economy. But we're lucky here, I guess, in terms of domestic production, that as consumers of energy, we have quite a good supply of energy. So not facing as severe of an energy crisis as, say, some of the European countries that we've heard about in the last couple of months. All right, taking a breath there and moving on to more of a company specific look. We've spoken about the difference between energy and utilities. We've spoken about the global energy crisis. We've spoken about different sources of energy. And again, feel free to go back through this kind of in your own time. But we've looked at the macro. So what are all of the factors that impact energy and utility companies? So let's have a look now. I've got, a couple of Australian companies to go through, a couple of US listed companies to go through, because you can obviously invest in Aussie and US shares with Superhero, and just to look at a bit of a difference between a few of them as well. Different sizes of companies and different industries that they operate in as well. So the first one here is Woodside Energy Group. So one of the biggest energy production companies listed on the ASX. The Woodside Energy Group engages in the exploration, development, and production of hydrocarbons all over the world. So their production includes liquefied natural gas, all the other types of natural gas and petroleum gas and crude oil. So kind of more of those traditional energy sources. They are a large producer of those, and also hydrocarbons. So it's quite a big company, $64 billion market cap. And just, you can see there some of the numbers around this company as an investment. It's got a dividend yield trailing 12 months of 9.5%. And in the past 1 year particularly, it has seen an increase in its share price. So again, you can kind of tie that back to understanding what's happening in the global market when it comes to energy. There's an energy shortage. So what that often means is when there's a shortage of supply, demand goes up, and therefore prices can go up, particularly in the short term, until that supply issue is fixed. So Woodside, I guess, has definitely been a beneficiary of the need or the increase in demand for energy supplies. The next one here is New Hope Corporation. So a bit of a smaller company. New Hope is also on the ASX, and their business is in coal, oil, and gas properties. So they have operations in quite a few Asian countries. So you can see there Japan, Taiwan, China, Chile and South America, Korea, Indonesia, Vietnam, India, and Australia. So quite a lot of Asian countries. And New Hope has been around for a long time, so 1952, similar to the founding time of Woodside there, and is based in Brisbane. Bit of a smaller company, so compared to Woodside's 64 billion, New Hope sits at about 5.7 billion. And similar dividend yield there. I guess New Hope and Woodside operate in slightly different properties, but both kind of focused around the fossil fuel space. So New Hope has also seen an increase in its share price over the last year. again, supply and demand, definitely been a beneficiary of that in the past year. And over the last 5 years has, performed quite well as well, due to the way that the global economy and market has gone. All right, Origin Energy. So the first two companies there were energy producers or suppliers, and then we're moving on now to a utilities company. So Origin Energy is a utilities company. It's an integrated energy company, and it does through production. So it produces natural gas, electricity generation, but then it also does the wholesale and retail sales. So it does do production, but then it also, I guess, does that other side of selling to retail customers, electricity and gas in Australia and internationally. So Origin actually serves around 4.2 million electricity customers, which is quite a decent share of the Australian kind of population and the market there. And its market cap is around 9.6 billion. So yeah, quite a decently sized company there. In the past year, Origin Energy has had a share price increase of 11%. So it's had quite decent performance in the past 1 year. But over the last 5 years, Origin actually has had a decrease in its share price, which you can see there. So yeah, again, always important to look at both what's happening inside a company, also what's happening outside of a company. An interesting one here too is, even though two companies might both have energy in their name, for example, it really doesn't mean that they're number one in the same business or producing the same things. It also doesn't even always mean that they're operating in the same industry or that they're competitors of each other. You really do need to look beyond the name into what they're actually producing, how that relates to kind of global trends as well. Energy, is absolutely a global sector. There's elements of supply and demand all around the globe. We are a global society now, and countries do interact and import and export things all the time, and that then flows down to how a company eventually performs too. So yeah, just a note on that one as well. And Mercury New Zealand. So Mercury New Zealand is a utilities company in New Zealand. So where Origin is mostly focused on Australia, Mercury mostly focused on New Zealand, but it is listed on the Australian Stock Exchange, so you can buy it on or invest in it on the ASX. And Mercury engages in the production, trading and sale of electricity in New Zealand. The company sells to residential, commercial and industrial customers. And it's got two brands. So if you were a New Zealand customer, you might see it as Glowbug or Bosco. They sell through those brands as well. And it also provides piped natural gas and sells solar equipment. So again, these companies aren't just focused on one kind of source of energy. They're often engaging in multiple, and they often have, a portion that may still be focused on fossil fuels as more of a historic thing, but they also may engage in renewable sources as well. And there are also companies that focus solely on renewables. So again, it's not that a company is necessarily either a fossil fuels company or a renewables company, but different companies are at different stages. We've seen a lot, in the news around AGL as well, and what's going on there in terms of kind of trying to influence transition to renewables. So different companies are along the journey at different points too, which can influence, not only what they do as a business, but also their performance too. But back to Mercury. So Mercury's got a market cap of $6.8 billion. It's had a smaller dividend yield than the other three that we've spoken about. And a bit of an inverse to Origin there, where in the past 1 year, it has gone down in terms of its share price. But over the past 5 years, it has kind of gained 60%. So, just over 10% a year in terms of an increase in share price there. So like it is important to look at the company. Also, when it comes to investing and looking at a company's share price and performance, taking into account not only the short term, but also the long term there as well. getting through a few here, guys. So thought it would be important to look at the US as well as Australia. And the biggest energy company in the US is ExxonMobil, which I'm sure most of you would have heard about. So truly a global company. And ExxonMobil explores for and produces crude oil and natural gas in the States, in everywhere, pretty much. I won't list out there. You can see that they've pretty much listed every continent there. And yeah, just has, quite a large amount of energy supplies, got 22.4 billion kind of barrels of oil equivalents there, and was founded a long time ago. So quite an old company, been around for a while, and it's based in Texas. And when it comes to the size of the company, you can see there 403 billion. So when you compare it to Woodside being around the 64 billion mark, just on a whole other level, as with a lot of companies in the US, truly a global company. Similar, dividend yields there, trailing 12.6%, and has also performed quite well, not only in the past year, but also in the past 5 years. Again, as global energy supply has been a challenge, and as demand has increased, there's been, the company has benefited from that as well. All right, now next era. So also based in the US. So next era has quite a focus on renewables. It operates and distributes electric power in North America, and it generates electricity through wind, solar, nuclear, which are the more renewable energy sources, and then also coal, oil, and natural gas facilities as well. Still quite a big company, so about $162 billion market cap, and performance there has also been quite good in the past year and 5 years. Something to mention is the PE ratio, so the price to earnings ratio there of next era is quite a lot higher than some of the previous companies. Again, we've done a webinar on intro to investment strategies, which you can go and watch on our YouTube channel, which goes through some of these terms if you want more information, but essentially kind of looks at the company's profits compared to its share price, meaning that this company's share price is quite high compared to its profits at the moment, which is quite common with a lot of high growth stocks, which you can see there that it has grown quite a lot in the last 1 year and 5 years, but always important to look at in terms of a company's fundamentals as well. And again, you need to consider your own personal objectives and risk tolerance, when it comes to investing in any investment, whether it be energy or otherwise. And I think this is the last one that we'll go through, guys, is New Fortress Energy. So kind of sounds a little bit similar there to Next Era Energy, but New Fortress is a global energy infrastructure company. So this company, what they do is they convert existing power plants and build new facilities to provide cleaner, reliable energy solutions. So very much involved in the transition from traditional energy sources to renewable energy sources. So they're looking at the actual infrastructure that surrounds all of this energy production. So they operate natural gas infrastructure and logistics to deliver solutions that essentially enable companies to, be better stewards for the environment and enabling that growth in renewables and therefore the economy as well. Bit of a smaller company, especially when it comes to the US market. So it's at 10 billion market cap at the moment. And you can see there that definitely more of that growth stock, as it's been, really trying to, change the energy industry as it has been in the past. And to finish it all off, ETFs, which are, I'm sure most of you know what they are, but essentially we've gone through all these individual companies, and you can go and research those individual companies, and if it makes sense for you, make an investment there. Or if you don't want to buy into an individual company, you can potentially look at an ETF. And what an ETF is it's a fund that is listed on the stock exchange. The one that's the example here is listed on the Australian Stock Exchange. And you can buy and sell that ETF like you would a normal share or investment. And instead of investing in one company, what you're actually doing is getting exposure to a range of companies. So the example here is the BetaShares Global Energy Companies ETF. So it's an investment that you can buy on the Australian Stock Exchange, but actually gives you exposure to the performance of global energy companies, even though you're not going and investing directly on the US exchange or in the US market. So when it comes to this ETF specifically, you can see that ExxonMobil is the highest percentage of that ETF's portfolio makeup. And you can see there's some other pretty, big kind of recognizable brands there like Shell, like BP. So really looking at the global energy sector when it comes to this ETF. And it also shows you, and this information is from BetaShares website. So BetaShares are the ETF manager. And so you can go onto their website and see the information for all of their ETFs. But for this one specifically, you can also see the sector allocation there, which you can see kind of breaks down where these companies, are doing business. So integrated oil and gas being the top for the moment, and looking at, production, transportation, refining, and then further down into things like semiconductors and renewables. And you can see the performance there on the left. So again, looking at more of a broader exposure to the entire energy sector as opposed to just picking one company. All right, we have come to the end of the content all about energy and electricity. So when it comes to investing with Superhero, for those that may not know, we are a share trading platform that allows you to invest in Aussie and US shares and ETFs. So there's quite a few thousand shares and ETFs on the platform, which may seem a little bit overwhelming, but our Invest tab does a pretty good job of kind of breaking those up into sectors. So you can go and kind of click on a specific sector you might want to see, or the search bar as well if you already know what to invest in or what you want to invest in. And just a couple of features are listed here. So we've got $0 brokerage to buy into ETFs, $5 brokerage on Aussie shares, and also when you sell an ETF in the Australian market, and then $0 brokerage on all US shares and ETFs. And we often get the question, why $0 brokerage on US? That's because we charge a small fee when you go from Australian to US dollars and back. So we give you the ability then to trade US shares without any brokerage fee. In terms of deposits into your Superhero wallet, you've got a unique pay ID you can use, or you can use bank transfer or BPay as well. Some of the features there are access to live market data and portfolio reporting as well. And there's no kind of account fees or fees to join. So you can join up and you can get access to those reports and that data with no kind of account fees or anything like that. We also have a partnership with Qantas. So if you head to our website at superhero.com.au/Qantas, you'll be able to see kind of any of the offers we have kind of live at the moment, which is a nice one to be able to earn some points for your next holiday there. And if you do have shares with an existing platform or another share trading platform, we do offer you the ability to transfer those over. And there's some information on our website on how to do that if you are interested. And you can also contact us on live chat at any time. So again, go to the website. The team are on all day. They're on right now. And you can ask them any questions you might have when it comes to using the Superhero app or some of the things mentioned here as well when it comes to investing with us. And that's all I have in terms of content for today. So if anyone's got any questions, feel free to pop those in the Q&A function now. And look, if we don't get to any of your questions today, we'll take those on and we'll aim to reply to you via email as well. Question from Anuj: what Australian renewables companies are in the spotlight? Anuj, we've got actually a renewables category on the site. On our app. So if you go to the Invest tab of the app, there's a little category bubble section, and you'll be able to pop into renewables and see some of the renewables companies that are in the market there. Again, the best thing I always do is as well, just do some research around, do a Google search. There's some great resources online that you can see. A resource I always mention in webinars as well is a site called Market Index. So you can go into Market Index and see actually a list of the ASX companies in these sectors. So you can see the energy sector, you can see the utility sector. It kind of allows you to see all of the companies, and then you can kind of click into each one, understand a little bit more about what they do. Again, like I said, you've got some companies that are, you know, focused purely on renewables, but then you've got kind of some of these bigger companies that historically have been, you know, got most of their energy from fossil fuels, but are on that transition to renewables. So, and at different stages. So no two companies are the same in terms of their focus, their size, and therefore the impact that they have as well. All righty. All right, a question on what the role of the PE ratio. Again, it depends on your own investment goals. So what you'll often see, and again, this is not prescriptive at all, but some newer companies, or what you might see called growth companies, often have a higher PE ratio than a company that has been around for a long time. And that's because the company's newer. So therefore, they're putting all of their money towards growth. They may not be making a profit yet. They may be, but they may not be making a profit yet. And so therefore, their share price, so people might, you know, may invest in these companies because they think they're going to grow. Therefore, they want to invest in and be part of the growth of that company. But the company may not be making profit yet. So that's where the PE ratio might look higher versus a company, you know, that's been around for a really long time. So the likes of a Rio Tinto or a BP, you know, when it comes to mining or energy, these companies have been around for a long time. And so they've, you know, had a long time to establish their business and therefore have had profits for quite a while. So they might see a lower PE, but there also may be a lower expectation for growth. So I hope that explains a little bit more about PE ratios. Can everyone still hear me okay? I'm just getting a little bit of a lag on my laptop. Let me just check. You can hear? That's great. Oh, you can hear, but I'm frozen. All right. Well, look, I might leave it there. We're in 45 minutes. Sorry about the lag on my screen there. But thank you so much for joining. And to any questions that we didn't get to, we'll aim to reply back to you on email. And thank you very, very much for joining our webinar. I hope that was helpful, and this will be up on YouTube shortly. So I hope you have a lovely rest of your day, and we'll see you in another 2 weeks for our next webinar, which will be all about finance and payments. Thanks, everyone.